Good morning, traders and investors around the world, and welcome to Thursday's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, little sell-off off the open last night, but we got a nice rally going here, up almost 7 points.
Yeah, we sold off last night after Chevron came out around 5 o'clock last night, 5 p.m. that is, an hour after the close. Gave an earnings warning. That sold off all of your oil stocks. Since then, Europe opened up over there, and all your European financial stocks are very strong this morning, so that's what's giving us a lift.
Okay, quickly running down the S&Ps, if that 1297.50 holds as the high, we have a downside target at 1280.50. If the 1285 holds as the low of the day, we have an upside target over 1300 at 1302. Going to find support on any pullbacks in the mid-range here at the 1291 area. Moving on to the Big Ten, Dennis. A little over a 3-point range in Apple Computer. Unbelievable. Get a 422.55 close. Early in the session, we did dash through that double bottom at 421.30 and 50. Hit 419.31, recovered nicely. Don't see a lot of resistance in this stock up to 426, and of course you got the all-time high at 427.75.
Yeah, Apple has really just been taking a breather here, not really participating in the rally. You're seeing a lot of stocks that performed well last year, not participating as much. It's kind of like a risk-on, risk-off thing the market's been going through. And basically everything that's been being bought this year is the stocks that were weak last year. So you're seeing a lot of your financials are strong. Some of your other weaker like Netflix and stuff like that, First Solar, been taking off. But Apple really hasn't participated. And I think that's that overall trend that what was strong last year is weaker this year so far. I don't know when this trend's going to break, but right now Apple 422.50 closing. It's trading 424.60, so it is up a couple of bucks. And keep in mind that 427.75 all-time high should give you some pretty good resistance.
Okay, ExxonMobil down in sympathy with that Chevron warning. We will use 85.08 to close as resistance. Looks poised to challenge yesterday's low at 84.47. And then you got a host of support down there at the 84.01 to 84.09, the 10 and 11 day lows. So look for support at 84 and resistance up at the close at 85.08 for ExxonMobil.
Interesting. That's where it traded to on the Chevron news right at 5 o'clock. It traded down to that 84 area that you're talking about. If you see I'm pointing them out on these charts, these two lows is what Joel's talking about there. But this stock was breaking down even before the Chevron news. It cut through the 85 yesterday for the first time. We had these three bottoms. Cut through it, comes up, and obviously, so that 85 area I think is going to give you some pretty decent resistance here now. And keep an eye on Chevron. That's going to be your leader.
Okay, going with Dennis's theme about the stocks that had good runs last year and not participating in as much. IBM would fall into that category, closing at 182.32, trading up slightly here in the pre-market. Going to open up right into Wednesday's high here at 182.81. So use that as your swing number. Not much resistance in that. After that, up to 183.72, which is Tuesday's high. Coming back on the downside, if you're trying any longs here, 182.32 is the close, should be your first level of support.
Looking at down to yesterday's low, 180.50, if for whatever reason the stock went into sell mode. You're starting to get a little bit of bottoms forming this 180 area. We had it a couple sessions ago. We bottomed out right around that 180.15. 180.50 we bottomed out yesterday, so call it 180. If we cut through that 180, then it starts to open up a little bit. But as long as we can hold that 180, I could see an argument to try a long off that area.
Okay, Mr. Softy kind of shrugged off the news yesterday of the lower PC sales. Opened darn close to its low of the day, making a low at 20.37, recovering, getting back up to that $28 level. You're getting a situation here, Dennis, between 27.98 and 28.19. you're just running in a brick wall here. Basically, the last 5 days of highs have fallen in that area. We're trading up, so we use the close 27.72 as support and resistance up from that 28 even, or actually 27.98, which was yesterday's high, up to last week's high at 28.19.
Yeah, I like all that resistance area you're talking about there, Joel. I think it starts around that 27.98 high from yesterday. Probably resistance all the way up into that 28.18, 28.20 area. We start to break out over there, then I'd want to be out of my shorts. But until I think, especially with the breakdown yesterday being as low as 27.37, I think it's a nice rally to sell.
Okay, the stock in the news, Chevron Corporation with their warning. That stock's gotten hit pretty good in the pre-market. First, identify some resistance. I mean, getting back up to Wednesday's low at 107.13. First point here. Really don't see much on the upside that, as far as resistance goes. Coming back on the downside, Dennis, I mean, we haven't traded below this 106 in quite a while. Here we are at 105.91. I think folks have to keep an eye on the December 28th low of 105.88. So we're right there. Below that, your next stopping point would be 105.06, call it 105. The low back from December 22nd. And right below that, 103.55, which was the low on December 21st.
Yeah, obviously this news here has propelled the stock down 2 points here. So on your chart, we're now trading down here in this where those couple bottoms were there from early December, that 105.90 area, I'm sorry, in late December there. Looking here, I think you're right. I think we might see some support coming at this 105. But this chart's broken here too. Like, we've had a nice run up. We made a double top up there at that 111 resistance area that we spoke about a couple days. Broke down yesterday, then fundamental news bringing us down lower here. I think you got to sell rallies on this one. I still don't think I would want to own it in my portfolio.
Okay, J&J currently trading up 22 cents in the pre-market. It did get up to that 65.50 area yesterday, Dennis. Got up there early in the session and then pulled back, opening up into that resistance again. You can't get too carried away. If it does, break through Wednesday's high, you got the 4-day high at 65.60. But after that 65.60s, things really open back up to the $66 level. Coming back on the downside, since we are trading up, we will use the close at 65.13 as support. Also, 65.20 was Tuesday's close as well.
And with so much money flying in assets still that are weaker last year, some of your stuff that was killed, money's flowing out of the stuff that was actually performing okay last year. So that's why I think you're seeing stocks like Johnson & Johnson, Procter & Gamble, they're not participating in this rally whatsoever. 65.5, Joel. I'm seeing a size seller there again. I know it was taken out yesterday. Some reason somebody's coming back there again to sell more stock, so expect pretty good resistance in the 65.45, 65.50 area, as those high frequency guys like to lean on that area as well. If the stock starts to go into breakdown mode, maybe you look to that low there from a few trading sessions ago around 64.40.
Okay, Procter & Gamble got beat up pretty good yesterday, making a low at 65.47, getting a little bounce to close at 65.88. Currently trading up 37 cents in the pre-market. It's going to open up in the resistance area above this area. We're looking at Wednesday's high, which was 66.31, which coincided with Tuesday's close. Above that, above the 66.36 area, things really open up back up to that all-important $67 level.
Yeah, the $67 is just huge on this thing. Any rally into the mid-66s, I think you want to be a seller up there for sure. Breakdown day yesterday, I wouldn't want to own this thing long. I think eventually it might test down to that 65 area here, possibly as early as today. We are up a little bit here with the market overall, but even 66, I think you're going to start to see some resistance in that area as well.
Okay, AT&T, kind of tight range yesterday, closing at 29.9. Currently trading up 7 cents from that level. You have two highs. You have Wednesday's high at 30.03 and the 4-day high at 30.09. Above that, it really opens up into the mid 30s 50 level. Of course, 30.68 was last week's high. Not sure if that's on the radar for today. Coming back on the downside, since we are trading up, that $30 level would be a good swing area and also support, as you had to close at 29.99.
Yeah, 30 is going to be key on this, Joel. It's trading 30.06, just up 6 cents from there. So pre-market's having a trouble, to even get any momentum going here. Obviously, so see where it opens. If that opens below 30, I'd use it as resistance. If it opens significantly above 30, maybe you can try to use it for support. Maybe use that for your swing number. Obviously, your major support down here at 29.5, where we bottomed a few days ago, and major resistance up in this 30.5 area before that thing went ex-dividend.
Okay, GE, General Electric, flirting with the $19 level, Dennis. That did take out the double bottom that we had at 18.56. Probably suckered a few people in on the short side. Only went 6 cents. Had a nice rally, closing at 18.88 with an 18.95 high. So any pullback to that area, 18.90-ish, should be good support. High of the move's been 19.05, Dennis. We break above there and could be testing the July 22nd high of 19.53.
Yeah, I think this 19 is still key, though, because we did have a breakdown day there yesterday. The stock traded down as low as, just get that number there for you. Bringing it up, but we're traded down as low as 18.50 yesterday, so we bounced back pretty good, right back to resistance here at 19. See where it opens. If it can open, around this 19 area and not go through that 19.05, then I think you still want to be a seller. Starts to break out through that 19.05, like Joel says, then I wouldn't want to be short it. But this is a rally. We're kind of starting already to give it back a little bit. We're up 8 points, 8.5 earlier. We're only up 5.5 now. So I wouldn't be surprised if this stock struggles to open over 19. And if it can't open over 19, then I probably would want to sell it as opposed to buy it.
Okay, our final component, Coca-Cola, kind of got beat up yesterday. A little bit of result of the downgrade. I think it was by UBS. Got down to 67.55, a level we haven't seen since mid-December. Currently trading up in the pre-market, 38 cents, a recipient of the move in the S&Ps. Look for first resistance point to be 68.71. That was Wednesday's high. There is a 40-cent gap there between Wednesday's high and Tuesday's low. So through the 68.71 level, good resistance from 69 up to 69.11. And we'll use that close at 68.06 as support.
Yeah, this one, that was a real bad day for it, obviously, yesterday. Pepsi being down as well. But this stock, the last 2-3 weeks, has not been good. Like I said, there's a little bit of sector rotation going on where money is flowing out of those assets that were performing well last year. Some of your defensive names are going into some of your more aggressive names, like some of your financials or some of those other stocks that we talked about earlier that were beat up last year. So I think that's why you're seeing the weakness in Coke here. Obviously, the downgrade had something to do with it. But overall, the stock was weak even before the downgrade, Joel.
Okay, that's a wrap of the SPUs and the Big Ten. We'll be back with our market movers.